I think in recent years we have seen an increased awareness and an understanding that the world, the planet as we know it, is hitting its natural boundaries in terms of how many resources we have available, how we use them, but increasingly how we overuse them.
And natural capital is fundamental for sustaining life and to support corporate operations. So companies that will not incorporate natural capital into their decision making are most likely to suffer poor financial performance.
For me, a key kind of trigger is going to be around breaking down what actually natural capital means. For a lot of investors, it doesn't mean anything yet. But breaking it down by actual themes. And if you look at sort of water, forest, and land use, and a bit of biodiversity, you've covered pretty much 90% of natural capital.
The markets, unfortunately, are incredibly short term. We know this because the way that they ignore so many of the ecosystem values that are imputed, the contingent valuations as they're called. We also know this because issues like climate change, which could have profound negative consequences for the future of the economy and people's pockets as valuation of companies gets eroded, they're unfortunately largely ignored by the markets. Now that's because this is a market failure.
Companies, in order to develop sustainable strategies, they need to have senior management buy-in, they need to engage with multiple stakeholders along the value chain, have a widespread employee engagement, and also have very disciplined mechanisms for execution. And that creates an environment where they create a sustainable strategy for the long term. Now, taking that comment, we have to change the culture at the top level. We need CEOs and executives that have the vision to create a sustainable strategy.
So at the end of the day, this has to work within the context of our global capitalist system. It has to work for creating better returns for shareholders and lower risk for bondholders.
I think we've seen quite a momentous shift really over the last 5 years. We've identified that there's been a doubling in number of measures taken by central banks, financial regulators and finance ministries to incorporate environmental social issues into the financial system.
We're very much at I would say, an emergent point in the marketplace where there's increasing recognition of the materiality of environmental, social and social issues to the business bottom line, to economic and financial performance. We provide support to institutions, current portfolio that includes the Sustainable Accountability Standards Board, the Climate Bond Initiative, Principles for Responsible Investment series, the Natural Capital Project, the Natural Capital Coalition, and others that are developing many of the instruments and engaging the financial sector in understanding and interpreting that data, which to date has been largely incomprehensible to many that need to make those decisions on risk and return. Not incomprehensible because those individuals aren't intelligent, of course. It's rather that we haven't made the translation across those fields. And the Rockefeller Foundation sees, given that we're able to take those risks and we can play a role in driving change in the community, sees a need to serve a role of bridging those two disciplines to better inform decision-making, for the betterment of humanity.